manage people's money. So I have seen a gamut of emotions when it comes to money. COVID may, oh, everything is going to zero. After a few months, everything is going to the sky. Now nothing is going anywhere. वहाँ पे मतलब ये एक साल कुछ हुआ है. So a lot of emotions drive the market, and I'll talk a little bit about a concept which I know I can't cover all about money, but I think a lot of us like to look at TV, look at stocks that come on TV and say, "Ye stock multi-bagger banega, multi-bagger. I want any stock I want to buy, I want it to become 2x, 5x, 10x." But I have a different opinion. When you are building your long-term portfolio, you have to build portfolios, not multi-bagger stocks. So I'll tell you this, okay? 10 years ago, if you had selected stocks above 1,000 crores, how many of them today as a percentage? There are 410 stocks, okay? 410 stocks that were more than 1,000 crores in market cap. If you had selected them, how many of them do you think would have given you 10x in 10 years? 10x is 10 times, more than 10x. 5? All of them? नहीं 410 नहीं उतना भी नहीं है यार. मतलब please Suzlon का छोड़, there are issues. But 5. Anybody else with a number? 4, 4, 7, 15. 40 is the right answer. 38 actually. 38 stocks. Roughly, matlab aapne blindly, if you had selected stocks, 1 out of your 10 would have become a multi-bagger. Today you would be standing and say, Deepak, kya yaar, multi-bagger, mere paas hai. Because by nature, 10% of your stocks are going to be multi-baggers in the long run. The point is not to select multi-baggers. The point is, how do you build a portfolio that grows as a whole more than inflation? Now, I will talk about building portfolios a little more. And I'll try to keep it short, but it's very difficult to keep a topic like this short because it can keep going. It's like a PhD. The problem with all of us is, I think, we get excited by something that is happening now. Like अभी कुछ हो रहा है तो अभी खरीदो, कल कुछ और होगा फिर वो कल वाला खरीदो. By the end of 2 years, you have 40, 50 mutual funds, 30, 40 stocks, all this stuff, because every time you bought based on what is happening now, right? So constructing a portfolio is different. You're actually saying, I want to build something that will grow in the long term. Every time you have new money, your salary comes, you say, what else do I buy? The what else is always, मेरे को कोई नया stock बताओ. Why? You bought one stock last month, you bought one stock last year, it's still doing well. Why don't you buy the same stock again? This is the concept of portfolio building. So the idea of a portfolio, you start like this. You say that I want to grow my entire wealth, not just 1 or 2 stocks. It's for the long term. If I have 100 rupees, how do I allocate that 100 rupees? You have to have a portfolio strategy saying, I'm going to buy 20 stocks. I'll put 5 rupees per stock. My 100 rupees tomorrow, I get another 100 rupees. I will add that 5 rupees per stock into the next set. So this is allocation. So you have to create a strategy, the thought process around allocation. Saying, I'll have 20, 25. There is no fixed limit. Somebody will tell you 20 se zyada mat jao, 30 se zyada mat jao. Peter Lynch, one of the world's most well-known fund managers, had 1,000 stocks in his portfolio at one point. It's very difficult to analyze 1,000 stocks. He had a team. But it doesn't matter because he got 25% plus returns for over a decade, having 1,000 stocks in the portfolio. So the number of stocks don't matter. It's the way you approach the stocks matter and the allocation. Out of these 1,000 stocks, 25 stocks were 70% of the portfolio. Everything else was like tiny things. But he was also running a multi-billion-dollar fund. But it doesn't matter the number of stocks you have. It matters the fact that you concentrate your best positions with the most amount of money. This is natural. If you had bought all the stocks in the Nifty 10 years back, today 25 of them would give you, in fact 10 of them would be down more than 90%. 10 stocks of the original Nifty 10 years back will be down more than 90%. Another 15 stocks will give you less than inflation returns. Right? So, in fact, yeah. And out of the remaining 25, only 7 stocks have actually more than doubled. Out of 50 stocks, only 7 stocks have more than doubled. But those 7 stocks have given you so much return that they account for the remaining. So your portfolio strategy should be, like this. I mean, what I feel is you should stick with the winners. ये नहीं कि stock double हो गया बेचो. I'll tell you one example. There's a friend of mine, and I met him recently. In 2014, he had said, "Give me 3 stocks to buy. I have some money." And I was full khush. I said, "Okay, these 3, some Deepak Nitrite," and it was all tiny stocks, 80 rupees ke stocks. So this guy bought it. I also had bought it. It went 250% up. This 80 rupees became nearly 250 or 300 rupees, something like that. I was full khush. I sold it. Today it's 2,000 rupees. He still owns it because उसने मेरे को खरीदने को, he had said, he didn't sell it. Those 3 stocks put together, although one of them is not that great and one of them is, the point about it is he stuck with the winners. And I stupidly sold my winners because I was feeling very good about it. I've discovered over time that these mistakes are common. Everybody does it. But you stick with the winners and get rid of the losers. Peter Lynch, in fact, Warren Buffett called Peter Lynch once and said, "Can I use this quote which you have just said in one of my annual statements?" And he said, "What is that quote?" It says, "Getting rid of your winners and adding more to your losers is like cutting off the roses and watering the weeds." Because, why are you doing that? The stocks are supposed to go up, reward them. जो अच्छा perform कर रहा है, you should give more money to them. So if a stock has fallen 30%, it's not attractive. If it has gone up 30%, it's attractive. So now coming to portfolios, why do you select stocks? That's a core portfolio decision that all of us have to make. Now we have a portfolio called Momentum. The philosophy here is very simple. Stocks that are going up, keep going up. In general, if they don't go up, they start coming down, you sell them and replace them with other stocks that are going up. By and large, this strategy worldwide, whether it is India or abroad, over a long period of time makes money, makes more than the index in general. This is the philosophy. Now, if I buy a stock and say, नीचे चला गया, नहीं ये stock अच्छा है, इसको रखते हैं, then it is violating my own philosophy. That says stock that go up, keep going up. I'm actually no longer with that philosophy. So if you have a core philosophy around the stock, that should be 70 to 80% of your portfolio. That is all the stocks that meet your criteria can be different. Your criteria can be, I want to buy stocks that have very strong growth. That means every year my revenue should be going up 30-35%. So 1 or 2 years maybe you'll spare, but like COVID. Otherwise you'll say कि 30% तो होना ही चाहिए. Now if you get a company that is like say ITC, it's a very good company, but it's not meeting this growth criteria, you're violating this philosophy of saying I want to buy companies which are growing. Then what is your philosophy? Your philosophy is something else. So you figure out the philosophy, that becomes 70% of your stocks. And then you put more money into the same stocks every month or every time you have cash flows. This builds your long-term portfolio. And then you have to have 20% as, because all of us are like this, okay, we'll also watch TV, we'll also say, yaar, ye matlab railway stock hi hoga. Abhi, because it has gone up like 20% and government is talking about railways, you have 20% of a satellite portfolio. The satellite portfolio are more positions that don't meet your core portfolio logic, but you still feel there is lots of opportunity there. These may be experimentation. We don't know, maybe this stock will do well. I don't have enough data, but I want to have a small position to start. So you build your portfolio around core and satellite. And over the long term, you will actually you have to track not each stock. So if you put it in some website, they will tell you this stock did 20%, that stock did 30%. It doesn't matter. What you should be actually calculating is how much is the whole portfolio doing. If the whole portfolio is doing well as a whole, including whatever you have sold, then you have a portfolio. Otherwise, you just have individual stocks or this thing. This way, mutual funds help you a lot because they select the stocks. You have to just SIP into the mutual fund. But I know people who have 30 mutual funds. Usko mila ke dekho to sab wahi stocks hain. So everybody is buying the same stocks, right? Then you go and buy HDFC Bank on top of that personally also. वो सब ने खरीदा, मैं भी खरीदूंगा. So end में वो fight हो जाए. This concept, when we talk about this, I think most of us tend to zone out कि अच्छा मतलब कितना decision करूँ. But there's a rule that you have only so many decisions in a day that you can do. After that, any decisions is gone. So if in the morning you got up, decided what to wear, that's one decision. Then you have to decide what your kids have to wear. That is another decision. Maybe 5 decisions. By the end of the day, you're not capable of making decisions anymore. Then somebody comes and tells you this is a good stock. You'll say, huh. Because you're done. You can't make those decisions anymore. And the more decisions you're making, every time you're just slowing yourself down. So if you have 100 stocks and you have to decide on those 100 stocks every day, you actually have no time for that. So at best, even if you buy 100 stocks, decide only 5, 10 in a week or in a month. Otherwise, your decision-making capability is gone. The last piece that I would say is more money is made in the sitting than in the choosing of stocks or in the buying. So you will actually do well to not do anything most of the time. Most of the time. कुछ न्यूज़ हुआ, कंपनी में आग लगी है, या कुछ भी, you don't have to act. It's only a theory that, oh, if we have heard this news, we have to act. The biggest problem with us is we are all creatures of action. We're all educated, right? So we're all like, I've got so much education, they're telling me something, उस पर कुछ तो respond करना चाहिए. You know, Mr. Ambani is, news is, rumor is Mr. Ambani is in hospital. अच्छा, रिलायंस को क्या करें, पीछे ये खरीदें, ये क्यों डिसीजन हम लोग ले रहे हैं? It's not like many of these decision elements are not worthy of making decisions in the first place. Over time, you'll realize that most news is either manufactured, irrelevant, or entertainment. So entertainment is when the news is there, but it has no meaning. I mean, it is more entertaining than anything else. Your portfolio decisions actually happen in your portfolio decisions should be like this. Unless I'm feeling really strongly that I have to do something, that really strongly can come because I'll find a stock which is so meeting the philosophy that I have to add it. That is when you should add it. It's like almost like saying, you know, when take the easiest question in the answer paper. The easiest question in the answer paper is the one that you want to answer at any point in time. So your portfolio construction or building is this. The reason I say this is different from multi-baggers is this. Nobody says my portfolio doubled or tripled. They'll always talk about individual stocks. So when we buy multi-baggers, we're actually buying it because of that selfie problem. Selfie problem is it doesn't matter that you have visited a great waterfall. You have to have the selfie. नहीं तो गए कि नहीं? How do I know you have gone unless you've recorded it, right? So earlier it used to be photo लो, फिर develop करो ये वो and all that. Now it is instant, Facebook Live. If I'm there, so this selfie problem comes into stocks. You buy stocks because you want to show off कि यार मेरे पास 10 लाख का पोर्टफोलियो होगा, मैं 10,000 रुपए का स्टॉक लूंगा, वो 50% ऊपर जाएगा, 5,000 रुपए, आई एम वेरी खुश. Whereas some other stock which I have, which is 1 lakh rupees, has fallen 20%. It has fallen more than that little one stock which has gone up 50%. And I am still happy that मेरा एक stock देखो मैंने चुना था. So we don't allocate sometimes enough according to how much we should allocate. We allocate according to the show-offiness. I'll tell you another thing. If a stock goes up 50%, will you buy more of it? How many of will you buy? Stock was yesterday 100, today in 5 days it has become 150. How many of you will buy more of it? 1, 2, 3, 4. The interesting thing is sometimes those are the stocks that give you the maximum return if you give more of your money to them. To give you a rough example, Bajaj Finance was at, I think, 80 rupees or 30 rupees effectively, and today it's some 7,000-8,000 or something effective after all the drama that's happened. So 30 also became 60, it doubled. You would have thought too much. 60 became 120, doubled, too much. Now it's 7,000-8,000 or 6,000 or 7,000 rupees. It sounds like all of these numbers were too small. The stocks that give you the greatest returns in the long term will always have doubled at least multiple times in the past. So price is a signal. In fact, when a stock falls to half, to me, that's a big signal. If a stock falls 50%, I don't care if I love it, this thing, other than COVID maybe. COVID में तो सब कुछ गिर गया था. But other than that, if a stock falls 50%, then I get the signal something is wrong with it. Regardless of what I know. Because one of the things we should all understand is why do we diversify? Why do we take more than one? Most of my net worth is in one company, Capital Mind. because that's where I have control over the company. I know where the company is going. I know that tomorrow if something happens, I can change the attitude. If I buy Reliance, how do I know what the company is going to do if something goes wrong? I don't have control over it, right? So I have to diversify. I can't just buy Reliance. I have to buy Reliance and this and that. And all. I buy multiple companies because it diversifies away from the lack of ability to take action. So the amount you diversify can be, like I said, 1,000 companies, can be 10 companies, can be. It depends on the comfort of each one of us. But to build a portfolio, you need a certain level of diversification. You need to diversify among, some people will say India versus US versus non-India. That is one level of diversification. Equity versus debt. So I like equity markets, but the equity markets can go up 30, down 30. मेरे को 30% I don't like. I want to bring the volatility down to 15%. So how do I do it? I put half my money into equity, half my money into, say, fixed deposits or debt, so that the 30% volatility will be only on 50% of my money. It'll move only 15% away. So I'll be happier that way. But I cannot look at the equity part alone. I have to look at it together. Only then does it make sense for me. So portfolio construction, I think, is different. The reason it's different from multi-baggers is that. How much more time do I have? Okay, 7 minutes. Okay. Sorry, I have notes. So, so there's a famous Seinfeld thing. Okay, he talks about the silver medal. Silver medal. कहता silver. Why is there a silver medal? I mean, gold is no gold. You finish first. You got bronze. कुछ तो मिला. The silver is like the worst thing, right? Of all the people who finished less than the gold, I was the fastest. That's what he says the silver is. It's a complete waste of a medal. It's almost like, ki kya hai? But in investing, sometimes silver medals win. And the reason they win is because the best mutual fund today may not be the best mutual fund tomorrow. In fact, it may be the worst mutual fund tomorrow. Somebody who's consistently coming second every year is probably coming first if you look at it on a 5-year basis. Because the winners will come, the winners will go. The guys who perform consistently, the silver medal makes the return happen. So sometimes when you're selecting stocks or selecting put, you don't care that your portfolio is doing better than all the mutual funds. क्यों? नहीं करना है मेरे को. I want to be in the second quartile. So if I divide the world into quartiles, the first 25% is the best. The second 25%, the last 25% is the worst. But I want to be in the second 25. The second quartile, the silver medal, makes if you're consistently in the second quartile, you're probably in the first quartile over a long term. This is also a different approach because multi-bagger में मेरे को top में होने का है. I want my portfolio to be multi-bagger, not individual stocks. And here's the here's the last bit that I'll leave you guys with. When you build a portfolio, when you consistently want to buy stocks or mutual funds or anything of that sort, in fact, a lot of our decisions in life are anti-portfolio. We have one career. How many of us have more than one career? Multiple sources of income, right? So you may have at least one is your primary business or your job. One may be a house that you bought rent for, or you get rent for. The third will be maybe a book that you write. But today, the avenues for doing something like this, there are hundreds. You can build a YouTube channel, earn revenue from that. You can do influencers, this, that. So there's so many other different sources of revenue that you could have in parallel. But at any point in time, you can only focus on one, right? So our lives are single thread. So at any point in time, you'll be able to do this. Investing is multi-thread because you don't have to focus on only one thing. So a doctor will do best as a doctor. That's why doctors sometimes make difficult investing decisions because they don't have the time to analyze and do this. So they'll find a person and say, "Tum karo." Many times those people will take the money and then do strange things with it, like, this. But it's because being a doctor earns you the most money that you focus on that. In a portfolio management setup, you can't afford to think like this. You have to think that I need everything that I do. I want all of it to contribute to my overall thing. And I don't have to have one thing. I can have different business. I can have businesses in the real estate space, that is stocks in the real estate space, or investments in the real estate space. I can have investments in commodities, Indian stocks, US stocks, and all of them. They will all work. Sometimes one will work harder or one will work better for me. Others will work less. All you want to do is have the same set of rules for everybody. If you do well, I will reward you. If you don't do well, I will take you out. And over time, I will have the best winners in my portfolio being 75 to 80% of the portfolio. I know this is probably not, I'm not going to go deeper into actual stocks and all that stuff, but I guess we've come close to the end of at least where I'm monologuing. I'd like to hear from you what you guys have to think or thought process. Yeah, so I think in the end, churn being the number of stocks you sell and you buy it again. There's a cost for churn. That in India, that cost is roughly 0.2%, 0.2 to 0.3%. So if you are able to get more than the churn by making a decision, then that should be fine. There will be times when quantitative strategies will not do well because things are just moving up and down and here and there and not going anywhere. There'll be times when they do extremely well because there's a good uptrend in that direction. The main thing to figure out here is not that they are churning, but are they able to generate good returns at the end of what they do? And that return, you'll have to see it through good times and bad times. So when the times are bad, are they generating a much worse return than the market? The times are good, generating much better. Essentially, then you are saying कि जब market अच्छा करेगा आप उससे अच्छा करोगे, but जब बुरा करेगा तो आप बहुत बुरा करोगे. So, I think the churn is not so much an indicator, but quantitative analysis is a very useful concept. It's just basically saying trust the numbers. So there are two ways you can buy a stock. I know the promoter. I played golf with him. अच्छा आदमी है. And I looked at the business, the numbers that the business actually throw out, the prices at which they trade, I can rely on them. And then I will use those to make decisions. Many times we make wrong decisions because of our feeling for अच्छा promoter अच्छा है, इसका नाम Tata है, इसका नाम. Sometimes the Tata company also will not do well for a long period of time. Right? ITC, great company, who makes cigarettes, which I don't agree with, but chalo, it's a profitable business because it's this thing. But its 6-month return right now is the same as its 5-year return. What it's made in the last 6 months, it's made in the last 5 years. Because 5 years it's been flat. Right? So if you invested 5 years ago, you're looking, yaar, mere ko to FD return bhi nahi mila. If you're looking, investing 6 months ago, you're like, kahan dega FD itna return? Which is the difference between buying a company that is good and this thing. So the quantitative nature of this is, if you remove the feeling part of things, the qualitative part of things, that becomes purely quantitative. Now, the numbers I like to trust are traded prices. जिस भाव में ट्रेड हुआ वही भाव is a true indicator of something. That's because I have given 100 rupees for it. It's worth 100. You may say it's worth 300. He'll say it's worth 400. But that is imagination. Actual reality is 100. You can use that quantitative analysis on that. So you should have quantitative analysis on numbers you can trust. The biggest problem in finance is people invent numbers. Invent everything. I'll give you an example. DLF, big company, all well known and all that. When it listed IPO, it said, we are making so much money. We said, very good. Even more money every quarter. Except what it was doing was, DLF was one company. There's a company called DLF Assets owned by the promoter. DLF would make commercial buildings. DLF Assets would buy it. Very good. So more and more buildings were made, more and more sales were happening, except there was no money. DLF Assets would not pay. DLF Assets would say, आप मेरा रिसीवेबल है. अरे ये तो मैं भी कर सकता हूँ ना. मैं कुछ बनाया, आपको बेचा, आप नहीं दोगे पैसे, receivable. I pay tax also on this. What happened when the receivables ballooned to so much? Then the 2008 crisis happened. DLF said, यार वो उधर तो पैसे भी, उधर भी पैसे नहीं हैं, तो उसको merge कर दो. So they merged DLF and DLF Assets together and took a massive loss. So sometimes you can't trust the numbers also, because you have to look deeper and say ये number का meaning क्या है. So there's receivables, there are lots of things. The corporate shenanigans are like hundreds of them. Let me tell you the two things. First, you have to give it room. So you can't say every 5 पे 2-3% पे निकल जाऊंगा. So maybe you give a room of say 15%. 15% if it falls, I get out. What happens if Bajaj Finance falls from 500 to 400? You've exited, goes back to 500. What do you do now? What do you do now? How many of them will say buy? I think no, but if it goes to 300, 200, huh? It went to 300, you sold. It went back to 500. Now what? Will you, the point is, if you don't have the thing to say, forget the last price. वो तो anchor था मेरा 500. अब आ गया फिर 500. It's good. It's doing well, and I want to buy it. Forget 500. It goes to 600. It's probably still worth a buy, because it's the core business that you're looking at, and the price should not be anchored to what you bought it last. If I keep doing that, I'll never buy any stock. Every stock has gone up. So I think I'm ambivalent in the sense I think both of them make money. In the investing world, there is no, it's not like maths. There's no one answer. Every answer is right at different times in life, right? So today I will tell you, 6 months ago when you asked Adani stock पे पैसा बनेगा, everybody was like नहीं. But now they're saying Adani stock में पैसा बनेगा. बन गया है. So philosophies may be different, but each philosophy can make money in different times. Bill Gates probably had one stock for most of his life. He's one of the richest people in the world, and that is a super concentrated portfolio. Versus Warren Buffett, who even now probably owns more than 500, 600 companies, and his average holding period is 6 months. Median holding period is 6 months. Of course, he's held some stocks 40 years, but there are lots of stocks he's gotten out in the first 6 months. That's because if he buys a stock and it doesn't meet, they do something that he doesn't like, he gets out first. He doesn't let that thing come and fester in your portfolio. कि बाद में देखेंगे. He gets out. So even Warren Buffett. So I think different philosophies make money at different times. My idea of a portfolio is you diversify to avoid only one thing: the risk that you don't know everything about the business. It's the core risk of that thing. In a quantitative momentum portfolio, we know nothing about the business except the price. We are not focusing on the business, we are focusing on the price. So therefore, I cannot control the price. So I have to diversify. I have between 20, 30 stocks. We have done portfolio tests with even 100 stocks. Other than transaction costs and the pain of actually doing the transactions, there's not a significant drop of return. So between 20 and 100, it's roughly the same. So we don't find that. So we just say कि 20 में करो ना, ठीक है, 20 to 30. But the same thing, I think, in a long tailish kind of portfolio. I'll give you an example. Venture capital funds, they will probably invest in 30, 40 companies. One of those companies will give them a 200x return. Baki 30 companies में 20 companies will fail. So they are of a different magnitude. They want one massive winner or one or two massive winners, and the rest of them can be ordinary. So if you go to them and say, sir, give me money, I will give you 5x return, he will say no. 5x return not of interest to him. Each of his stocks has to have potential to give 100x return. नहीं तो उसका नहीं बनता है. Right? So the portfolio diversification, concentration risk is that can you get a few stocks that can give you super normal returns, or do you make wider bets, each of which has a great potential, but you don't have enough. Who's Peter Lich? I would say diversified, because he's got a long tail. It's got 25% in, and plus this 75% was at a point in time when the guy took it. I don't think it was 75% from the beginning. They sold, but he doesn't care about the ones that went sour. He just reduced the allocation in them to the point where they don't matter. So more money would come, it would go only to the winning stocks. So initially he may have started with 2% in each portfolio, each stock. Then slowly some stocks became 0.1%, some stocks became 4-5%. So that's what So I'll give you the core. We talk about this in the PMS all the time because we are not allowed to guarantee returns or anything like that. Huh? But here's the thing. What I say is equities in general will give you economic return. If the GDP grows at certain amount, you will get that certain amount in your portfolio over a long period of time. So GDP has two components, real and nominal. Real का फंडा है कि how much more productivity do you have? I mean, if I was producing 100 widgets today, tomorrow can I produce 105? That is 5% real growth. The price of each widget can increase. That's inflation. That inflation is the other part. So if you add real growth plus inflation, that is your actual economic growth. So India gets roughly 6% inflation, roughly 6% real growth. So 12% आपका आना चाहिए in the long term. If you do really well, you will get 14-15%. Of course, nowadays तो 14-15% क्या हम लोग कहते हैं एक दिन में आ जाएगा यार क्या मतलब दीपक शनॉय क्या पागल हो गया ये तो. But I'm sorry, but this is unfortunately this time. It's one of those times when people advertise on Twitter only that I put 10,000, it became 15,000 in one day kind of thing. But in the long term, getting a 2, 3, 4 percentage point greater return than equity is massive. Then the economy is massive, which is why a consistent return of 25%, which is what Warren Buffett got between 1970 and 2010, 28% annualized return is fantastic. Except from 2010 to now, he has done less than the index. Berkshire Hathaway growth has been less than the index. That means not everybody is invincible. So at some point you will find scale, size. वो 200 बिलियन कैश में लेके बैठा बेचारा. बेचारा तो नहीं बट फिर भी मतलब कहाँ इन्वेस्ट करोगे 200 बिलियन? वो 200 बिलियन में तो like you can buy all of TCS. So and that's this thing. But I think that the concept of trying to get a return has to do with two things. First, how are you aligned with the economy? If you're a well-diversified portfolio, you're most likely aligned with the economy. And how much money do you have? The more money you have, I mean, I'm talking about like thousands of crores, that then becomes it's हानिकारक to your portfolio in the way. So for instance, if you're a small cap person, मेरे को सिर्फ small caps, micro caps में invest करना है, so then you generate a lot of money. At some point, you cannot manage more than 100, 200 crores. So you're thinking 100, 200 crores is a lot of money. But if you start raising money from people to invest, suddenly 100 crores is, then you can't get the same return. Because you'll invest in some company, it has only 100 crore market cap, you'll buy 50 lakhs. I know people who call up and say, sir, कोई shares हैं क्या इसके? हमने कि कौन सा कंपनी है? नहीं बहुत छोटा है मेरे को चाहिए किसी के पास भी नहीं है. So the poor fellow is calling everybody he knows because वो market में order डालने के लिए, if he puts his order, the stock will go upper circuit. So if you're that person, you cannot have too much money. And then if you have a lot of money, then you'll go large cap, mid cap, small cap. You'll get the economic return of the country. So I look at this as we have a very wide market. You can't predict everything that happens. Why would you book profits is the good question. Why should you book profits? So I think selling has only 3 rules according to me. You sell because the stock no longer meets your investment criteria. You sell because you want money. I want to buy a car, I want to buy a house, I want to travel somewhere. The money's only purpose in life is to be spent. Whether you spend it today, it's called spending. When you spend it tomorrow, it's called investing. Right? So if you want to spend, you take your investments out and spend. So that's the second reason. The third is if you find a better opportunity. ये stock अच्छा है पर ये stock इससे अच्छा है. I want to get out of this and put that. These are the 3 reasons to sell. I would say this has nothing to do with the amount of profit you've made in the stock. The short-term vagaries of the market should be naturally adjusted, saying if the stock goes down, I will sell it when it goes down, not when it goes up. So it may be at a high today. The macroeconomic event can come. Putin attacked Ukraine. Today we are 3% from all-time high. 7 महीना हो गया war का. People said, oh, the world will come to an end, world war, this, that. All of this happened. Gas prices went up, US में inflation, US is down 23%, we are down 3%. Nobody could have guessed this. If you had sold at that time, you would feel good for exactly 3 months, then you'll feel miserable again. Because stocks are back. I mean, not all stocks, but some stocks are back quite a bit from there. So I think getting out is profit booking is probably a bad idea. in general, unless it's done for one of the three reasons. You found better opportunities, you need the money, or so you shouldn't do it for valuation. You shouldn't do it for I want to book the profit here. In fact, book losses more than booking profit. That's my philosophy at least. Franklin May, there was a governance issue. So this is the other reason why you should get rid of stocks, because there was a governance issue. And the governance issue, we were tracking this. We liked Franklin for the longest time. And then when there was these issues that started to happen where they weren't able to segregate a certain thing out of their portfolios, we said it's time to move out. They lost 20,000 crores, they went down to 12,000 crores in 2 months. When we saw this, we said that, you know what, he's selling all the good stuff to get people out. The bad stuff still remains in the portfolio. I don't want to be left holding that bag. We said we'll go out. This was more a governance issue than it was about individual things. So that, of course, anytime you find a governance issue, sometimes even with governance issues, stocks do well. But you should say, chhod do. Oh, that is not I don't want to earn money from there. It makes sense. I mean, you're not booking profits from the perspective of, you're booking the lowest profits that you have, effectively, right? Coming out of the weakest hand, that's fine, because I mean, of course, your point is you found better opportunities. That's the reason you're selling.
Suggest a bouquet of stocks that a person should buy based on what he thinks.
So I'll tell you that this is very easy for me. There are now ETFs or index funds. Okay, you don't have to select them. You say Nifty index fund, it will always buy Nifty. अब वो सूजलो और निफ्टी में था आज नहीं है, आपको कोई फर्क नहीं पड़ता है, वो निफ्टी ऑटोमेटिकली बदलता रहेगा. You buy that for your comfort. This is large caps, and in general, Nifty, Sensex, or Nifty Next 50, all of these are good individual things to purchase because they diversify you. Add some US. Now, today I'm very comfortable saying US because 6 months ago it was 30% up, now it's 30% down. You add some US alongside. India, there are not so many instruments, but today, for instance, I think the Indonesian market is very good. Indonesian market we can't access, unfortunately, but that's Korea. No, don't. On Korea, I am opposite. I think I know India more than I know Korea, and I think here we are going through some serious changes. I mean, have you guys been to Bangalore? You come to Nagpur after that, you're like, boss, ये roads हैं, metro बना है. I mean, you don't understand. We live in a village. If you see this infrastructure here, you're like, boss, what are we doing? Why are we living in bloody Bangalore? This is fantastic. Nagpur, Indore, Surat, the second tier India or third tier India is fantastic. ये सब अभी develop होगा. This will come. Bangalore has become like that. Of course, it was nice at some point in time. Nobody remembers, but here is fantastic. So this, when it comes, you have no idea. You will also get potholes like us. Okay, but you will. I mean, this is India. This is really something that is massive. Reverse of?
Reverse of monetary bias. I mean, people living in India underestimate what is happening in India.
I'm telling you this.
Every 2-3 years we're building equivalent of Europe. The kind of infrastructure investment is happening. Entire Europe is not going.
No, the scale of this is so massive, and the last 5 years have showed me how things can change. It's just brilliant. Sorry, you.
I am buying only Nifty 50 and Sensex funds. How do I buy US?
There are some now mutual funds that I don't know if they currently allow it. हाँ, थोड़े से हैं. नहीं, वो कोई सेबी रूल था कि I don't know, some closing. अच्छा. हाँ. Window opens. So there is this Nasdaq 100, Motilal S&P 500, Navi, Edelweiss, few funds are there that invest in the US. So you get that return also. You can buy it.
Is it possible to consistently beat the index funds? Because what I have noticed is that घुमा फिरा के जितना index देता है उतना ही return आता है.
So we run a PMS. We have to say, of course, possible. No, I think it's possible because it depends on your capital. I'll tell you, a person with 10 lakh rupees today can beat any index. even 10 crores. At 1,000 crores, you have a problem. At 10,000 crores, you have a bigger problem. At 100,000 crores, there's no chance. Very little chance. So no, I'm just saying. I'm saying that it's about capital. At 10 lakhs, you can make a lot of money. So much money that the index cannot even come close by. Because a lot of trading opportunities, short-term opportunities come, which you can do. You can't move the same money at 100 crores. So it's also about that. I say this because if eventually, I'll tell you the best way to make money is to put it in a business that you run.